All right, welcome one, welcome all across the pond.
All right, welcome one, welcome all across
Whew.
the pond.
Okay, I know, I started a minute early. Just so excited. Wanted to hop on, get that extra minute, because it's a big minute. A lot can happen in a minute. All right, so we are here, we are live. It is October 30th, Wednesday, October 30th, 2019, 1 p.m. Eastern Standard Time, or daylight time. I'm not sure. We haven't rolled the clocks back like they have in other parts of the world. We do that this weekend coming up. Saturday, 2 a.m. becomes Saturday, 1 a.m. Very interesting stuff. In other words, that would make for me the daily candle close after Sunday. So starting on the weekly candle close this Sunday, for me, it'll be 7 p.m. instead of 8 p.m. So things are changing all across the board. I know, it's crazy. All right, I'm getting DMs and text messages and phone calls and all sorts of stuff asking about what's going on. It's all good. It's all good. Here's the 200. Here's the orange line, right? That's your 200. Price is coming down and it's testing the 200. This is what confuses me is this is what we want, and then when we get it, people are fearful that it's happening. It's okay. Just let it do its thing. All right. This line right here, that's my big deal. All right. Not every trader feels the same way. I do. This is a swing fill, and it's an important swing fill, and it's important that it's on these two candles. All right, and I'll explain why. When price comes up and stops traveling north, has a reversal. Okay, this is a clear reversal. Not just a clear reversal. It's not just any reversal. It's not just, one candle down reversal. It's a 25% drop. Okay, it's $3,500 from the high to where it found a low after, and this is after going $6,447 or 86% up. So no matter what anybody says around the world, something happened right here. All right? Something happened there. Enough sells came in to outweigh the buying that was being performed over the course of, let's say, 2 weeks. All right? Something exhausted the trend. All right? It could be anything. It doesn't matter. We're not worried about the why. We're worried about the what. Right? What happened? Price stopped going up, obviously. Price went down 25%. Okay. Now 25% on 14K, like I said, was about $3,000, a little over $3,000. That's a big drop, but all things considered, is 25%, right? So it's not that big. It's not like a 382 pullback, which would be 38%. All right? Now, what's important? Price rallied back. Couldn't compete with the loss from the day before. Staggered out for a day sideways with a mini pull. Dropped it, lost it all. Now this candle close is about even, right, with your launch pad move. This was the stab down that got bought back up. Now you're back there again. So what does that mean? Well, that means the bears at this point are in control. They control this candle. They control the destiny. It's up to the bulls to take it back. And they tried right here. Super close. Okay? They tried. But when the candle opened, now I don't remember this day, but when the candle opened, I would suggest that we got the high first. And then the bears controlled the rest of the day by pushing it all the way down here, and the bulls came up short, and that's why the candle closed bearish. At the end of the day, it's kind of a spinning top slash doji. It's like a long leg doji, but the body's a little too big for a doji. 1.27% is a little high for a doji. But then the next day, right, now we have a candlestick pattern, single candlestick pattern, and that's a hammer. What the hammer shows is a massive push to the downside, very small push to the upside, but the bulls maintain control from the open of the candle. In other words, the exact opposite of what happened over here. The bulls opened the candle. The bears more than likely pushed it all the way down, but all of the buying support came in. Volume was good, not better than the day prior, but volume was good enough to at least reverse any further downside, closed the candle higher than when it opened, and actually closed higher than the open of the day prior. Okay? Now, why do I say all of this? Why is that important? Why is this important? Because this is the beginning of the rally that failed. All right, let me say that again. This is the beginning of the rally that failed. And what did it fail to do? It failed to make a higher high. And that is why if you grab a ray and you lock it on anchor 1, anchor 2, that is why these two price areas are important. This is where price stopped. This is the gigantic failure that caused all of this. All of this, you could blame it on that candle right there. All right? In fact, you could blame it on the next candle, really, because that next candle failed to at least create a higher high and, create a trend to then establish a higher high from here, or whatever. You don't have to get ridiculous about it. I'm just saying that is why that line for me is important. Not every trader sees it that way, and that's fine. You have to be open to analysts thinking all different things all the freaking time, right? That's how we are as people. We're just weird. All right, so anyway, that being said, I've been down this 400,000 times. I'm going to go over it one more time. This was your break and close above this line. Your confirmation candle gave you a $2,500 loss, $2,572. Then we challenged it again, but it was resistance. Again, it was resistance. Again, resistance, 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 resistance. When you have that much confirmation on one line, it's valid. It's beyond valid. I mean, to the dollar amount over the course of 7 to 10 days tells me that somebody else is looking at that line, right? And they're probably makers because they're the ones pushing the price. Now, we broke and close again, right here. Confirmation candle said get lost, and what happened? $2,574. It's a $2 difference. It's a $2 difference. It's the same exact move. Now, the preceding trend is different. Understand that. This is a reversal. Preceding trend was going up. This is continuation. The preceding trend was sideways, but overall down. Two very different scenarios, yet the thing they have in common is the break and close above, confirmation candle weak above the swing fail. The other thing they have in common, remarkably, is the amount of loss over the course of 6 days. 6 bars, 6 bars. It ends up being like $1.50, but we're not going to nitpick. We'll call it $2 because it just sounds a lot easier to say. That being said, now we are broken over this line once again. This is a clear break and close. You cannot argue that. It cannot be questioned. Here is your line. Here is the break. Here is your close. Your confirmation candle, although sideways, confirms the break. So what does that mean? Why are we going down? Well, we're not going down much. All right? And by every break and close, what do we always look for? We always look for the retest. It's a breakout play. So a breakout play generally means there is a level, a level that was being respected. That's this line right here. That trend was just being, let me get rid of these. It was being respected. All right? And while it was being respected that whole time, okay, price always reacted to it every time it came up to it. This reaction was the break. And that's a big deal. We broke out of it. But now, if you want an SR flip, or in this case, an RS flip, resistance turning to support, you have to actually test it as support. You can't just break and then just leave it, because then you're always wondering, hey, do you think that level was support? So, to clarify things, coming down and testing it is the best thing you can do in order to find support. Right? You want clarification. You want confluence. And you want something that'll tell you, okay, I'm going long and this is the reason. And the reason you'd be going long right here, right at the 236, is confluence. Confluence. 236, local retrace, 236, structure, 8802, previous structure high, just above 8802. Call it 8810, whatever you want to call it. Plus swing fail, RS flip, SR flip, whatever you want to call it, support come down. That's the move if you're long. You come down, you get your support, and you get the hell out of Dodge. Now, that is if you are playing that one specific pattern or the one swing fail. That's this. If you are a short-term trader, or if you just don't care about this line, or you drew it differently, or whatever the case may be, well, we got a pattern, and it broke right here. 4-hour chart, right? This would have been, had it broke north, a bull pennant, because you have this right here. You got a virtually vertical price action move that moved into consolidation, painting lower highs and higher lows. Okay? Here's your high, here's your lower high, your higher low. You never got the fifth check up here, which aggravates me, but hey, you can't have them all. When you lost it here and it started to come down, that was your first indication that, hey, wait a minute, we should have been up here. Now, every pattern doesn't have to be perfect. I get it. They don't all have to be symmetrical. I get it. And you always don't have to have 5 points. I understand. But when it came down here, you got a double touch. You got this little relief push right into resistance, which let's not forget that this big red zone is an SR flip. This is support that got turned into resistance. All right? Okay, now, all that being said, here we are again. And we're working our way down. We're getting very close to our line. But this pattern suggests that you would be coming down to about here. So the reason why a lot of traders get confused when they first start trading and then they first start learning about indicators is they go into indicator overload. And it's like, it's an RSI, a MACD, an OBV, an MFI, whatever they could get their hands on. Every single MA and EMA from here to Hong Kong is on their chart. They got Ikimoku, they got pivot lines, they got anything and everything you could ever think of all mashed on the same chart, and they don't know what the hell to do. Because a dozen of them are saying go long. Well, another dozen are saying go short, and another dozen are saying it's all chop, don't trade it. So you have to put weight onto your patterns, onto your price action, onto your candles, onto your horizontal support resistance, onto your Fibonacci levels. Every single thing you do that's going to help you make a trading decision comes down to how much weight are you actually putting on it. So am I going to put a 4-hour symmetrical triangle over a daily swing fail that's been going on for months? Not me. No. Some traders, yes. So this is an option. This also has confluence in resistance. This is a massive, massive level of resistance. Let's go back to the daily. Okay? When this shot up, and it shot up $1,200, followed through with a candle that was like what, another like 1,000 plus before it started coming down, $1,700. There was a lot of people that were trying to buy up here to catch the rally because they thought it was going to 20K. No. This is resistance. This is resistance. It was support 1, 2, 3, 4 times, broke clean, come up. Your first test is usually going to fail. All right? That is not, I don't have a number for you. I wish I did. I don't have a percentage or a strike rate or an amount or, 7 out of 10. I don't have that. I just have charts and experience in watching them usually fail. So I was not surprised by this at all. In fact, I told a bunch of people just short it whenever the hell you can and just take the quick rip right to the line. Don't get greedy. Don't try to short it to $1. Just take the rip and walk away. Right? We say it time and time again. You want to buy support and you want to sell resistance. Right? So somebody asked me earlier, if we're playing this triangle and you're shorting, $1,500, well, don't you want to short like right here? Don't you want to short here or here? Like every time the candle moves the slightest bit, you feel like you're losing money. You have to look at the whole picture. This is support. You don't want to short support, do you? Now, even if it breaks, that's when you want to short because now it's turned to resistance. Short resistance. Long support. So this is a mixed bag. You got a dozen traders that are all longing this right here. And then you got another dozen traders that are all shorting this down here. Waiting for a confirmation that, yes, this broke this support level. And then you buy the retest for further downside. It's a mixed bag every single way you look at it in every single chart you look at. It depends on the trader. It depends on the time frame. It depends on how much weight you're putting into what you're actually making a decision off of. If you're only making decisions off of MAs, you're going to have a very different story to tell. Why? I'll show you right now. break and close above the 200, come down, retest, buy. Done. A trader that's solely making decisions off of moving averages would have already bought this. And right now they're in profit. Right now they're in profit. Let's see how much. 1.2%. 10x leverage, 11% trade. And close them whenever the hell they want. That's the other thing. You scalping? You could scalp this long. In fact, you could scalp the short right here at VWAP. VWAP's at 91.74. Short that right down to the 236. So I want to be able to bridge the gap between the confusion. It doesn't need to be confusing. It doesn't. It really doesn't. In fact, a super, super duper simple strategy, right? Like extremely simple. We'll pull up any chart. Any chart. Give me a chart, guys. Any chart you want. How's it going, Mr. CX? Joe Lopez is doing great. We're on early today. By the way, you're in California. Oh, dear. Yeah, so it's like 9 and 10 in the morning for you? I'm sorry, buddy. ETHUSD, what's poppin', SP family? Robbie, hi, guys. Oh, man. Moo. Give me a second. Oh, man. Muaid. Al Mahadi. What do I got? Come on. Was it close? And it is the best time for you. Awesome. And OY says Theta BTC. Thank you for the chart. Theta BTC. Okay, so look. Whoa. Maybe I should spell that right. Theta. Oh, my Lord. BTC. See, I don't have my coffee. We're at the wrong time for me. I need my coffee. All right, so super simple strategy. You take a 9, take a 21. EMAs. And look, I'm not saying use this strategy. I just want to give you an idea. So this is my way of uncomplicating a complicated topic, all right? So bear with me. Don't shoot the messenger here. All right, it's a 9 and a 21, and it's a 4-hour chart. Super duper simple. Cannot mess this strategy up. Your 9 EMA is black. Your 21 EMA is red. Every single time the black crosses up over the red, you buy the open of the next candle. And then you close the trade on 2 conditions. 1, if you know candlestick patterns, use those. That changes this system like 1,000%. If not, it's fine, but you're not going to capture the same amount of gains. Close it every time it crosses back the other way. Again, open of the next candle. So in this situation, this is a horrible example, but it's an example nonetheless. We're not cherry picking anything here. This is real world stuff. This is a real world chart. I did not pick it. Whatever. It is what it is. Not a great example, but hey, who cares? Here's the cross. Right here. One second. I got to slide this thing up here. Here's the cross. Okay? Right here. Now, when they are overlapped on top of each other and no decision can be made, you simply don't trade that. Period. So we know that the 9 has now gotten away from the 21, right? We can all agree on that? The 9 is away right here. It's together. The 9 is away. So your cross is literally right here. So you buy the open of the next candle. Bang, right here. Hello, I'm buying you. Okay, no problem. Now, we wait. 4-hour chart, a lot of periods are happening here. You're seeing all these massive gains. You're like, oh, dude, hell yeah, man, this strategy is insane. I digress. Here is your next cross. Right here, the opening of the next candle. Done. Now, you used 23 days, and this would be a huge con in this strategy outside of a pro because opportunity cost. You had that capital tied up for 23 sessions, so just about 4 days, right? And you got 7%. But you got 7%. It is a win. Okay? It is a win. Now, did you achieve 24%? No, we all know that you didn't. You got 7%. It's right here. The chart don't lie, 7%. Had you understood candlestick patterns, such as this move right here, I would call this a shelf. I would have gotten out right here. So where you got 7%, I got 22.35%. All right, but we're not here to compare gains. All right, you're a better trader. We're not doing that. This is just to show you that there are very, 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 very simple strategies out there. This guy who's doing this strategy, man, he don't care about your symmetrical triangles and your swing fails and your 200-day moving averages or your volume. Man, he doesn't care about any of that. You know what that's called? Eliminating the noise. He's focused on one thing. Crossover, bang, bang, buy, sell, done. Move on to the next one. Now, if this was margin, or if this was something that you could short, this would just be a flip. You'd buy long, you'd flip short. Right here, you'd flip long. Right here, you flip short. Okay? This is one example. You are not going to win every trade, right? And when you get into super choppy stuff like this, it gets a little dicey. Ain't going to lie. Gets a little dicey. It doesn't matter. It's a strategy nonetheless, and it can be profitable. Consider this as a foundation and then improve upon it. Maybe the 9 is just not enough. You know, maybe you need something a little faster. Maybe you need an 8, or maybe you need a 7. Maybe the EMA is just too much. Maybe you need an MA. Maybe you want to use a hole. I don't know. Maybe instead of staying in the trade, right here, when you get a candle break and close below your 9, you're out. Out. There's 1,000 different ways you can condition this exact strategy to work for you. If you want to tighten up the reins and say, I'm getting out if I get a candle below, go ahead. If you're saying, I'm not getting into this unless price is above both the 9 and the 20, go ahead. Go ahead. All right? That's fine. If you play candlesticks on top, say, well, dude, look, you got a shelf. I'm getting out. I'm done. This is over. Maybe you add volume into the mix. Say, you know what? It looks like we're starting to get weak. Maybe you add the VWAP in there and say, all right, well, you know, once we start losing support at VWAP, I'm out of here. So you're out right here. No problem. Or actually, you're out right here. Right here. You had more gains to go, but it's fine. All right, so this is just one way to ease the confusion. What you're looking at depends on you. You as a trader. The type of trader that you are. A scalper does not look at the daily chart. It's as easy as that. A 1-3-5 scalper is looking at a 1-3-5 minute chart, a 15, and probably an hourly to get an overall macro bias. Can you think about that for a second? An hourly chart is a macro bias. Yeah. If you're trading a 3-minute chart, hell yeah. You're trading a 1-minute chart, absolutely. Absolutely. That's 60 1-minute candles inside of 1 hour. And you're looking at an entire chart like this. So here's what a scalper's looking at. A quick 5-minute scalper's looking at this. He's doing this hourly chart. He's getting some levels over here. He's saying, okay, blah, blah, blah. Yeah, I got this little trend, blah, blah, blah. It looks like it kind of broke down, whatever. Going like this. All right, so I had this like parallel channel move, started to break down to the downside. All right, that's good. My overall bias is short. We do have support levels down here, so I might want to be looking at something going on in this general vicinity. But otherwise, I'm more or less short. So now he's like, all right, well, let me just throw the minute chart on and see what we can do about this. Okay, so in the short-term view, what I'm looking at is we got sideways action, relatively easing up slightly, big push down, and then we're going sideways down, but we got a higher low over here. So this is okay for me. I'll take that right there. And then I know I got some resistance levels up top over here because we had a tough time right here, struggling over this zone here. But I'll tell you what, we should be heading towards VWAP in that ballpark over here. So I know price wants to go into this general vicinity. So since I have this higher low here, I could wait and I could probably buy in low and downside down here. If we get to that level, I'll buy, and then I'll be pushing up to this zone up in this ballpark. I'll sell right here. 1.77% gain, 10x leverage gives you 11.7%. But do you think this dude is looking at this and making trading decisions? Hell no. Not a chance. Not a chance. All right, so understand who you are as a trader. That's one. Get that locked up. Knock that one out of the park. All right, and then you can start to decide how you want to, add weight to what you're actually looking at. Is it even relevant? Does it even make sense? If it doesn't, then, eliminate the noise so you don't have to look at it. Speaking of noise, Theta is like, what? So Theta's doing some things right now. It had this big move. It's all a false break. So, I don't want to say pay no mind to it, but at the present moment, you don't want to make a decision off of this, right? So you got your top side right here. Okay? This right here. You got a nice confluence down here. So now, again, this is like every analyst is different. I could put it right here. Yes, I absolutely could. Look at the distance between these levels over here. Would it make more sense if I locked it in on the first candle? Here's the first candle. That's the first rally candle. Right? And then price comes way down, it rallies back up. Now you have rejection and rejection and rejection and rejection. Okay? Now, like I said a long time ago, there's no real rules, but your own personal demons. Okay, so just looking at this real quick, we could see, I know this price came down here, but this is choppy mess, and this is a nice move up with an excellent push down. So therefore, our pattern is now born. Low side, support, 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 support. Been tested 4 times it's held. Lower high, lower high. Ooh, well, we do have a high over here. Still a lower high to peak. But what happened very soon after, it looks like it gave it all back. More or less a false break or a premature attempt at the 200. Okay? Because if you were to eliminate that action right there, whoa, whoa, whoa. That's not what I wanted to do. So eliminate that completely. And now what? No. Now look at price. It virtually just continued right what it was already doing. It's as if that never existed because it didn't need to exist. Okay? I do the same thing with like false breaks and like scam wicks, stop hunt, stuff like that. I'll just ignore them. It's irrelevant price action to me. This is what you're looking at right here. This level is a level for a reason. All right? There's a reason why every single time it gets to this level, it gets rejected. Except for this one time right here, which ended up doing and losing over 100% from where the rally started. All right? So what do we have? Outside of our large descending triangle with a false break, outside of that, we have a range. We have a ceiling, and we have a floor, and they're both very well respected. Overall, price, if you somewhat ignore some of these ridiculous wicks, overall price is painting the idea that it's starting to make some higher lows. Okay? You have a little bit of a lower high situation. Again, if you ignored all of this, you're sort of right on path here. You're just kind of locking down this level. So there's a lot of different things you could look at this. A lot of different ways. You could draw this as a major descending, like so. Okay, here's your major descending wedge. Oh, sorry. What? Oh, I did it all wrong. Hold on. I got confused by my own lines. There we go. So you could draw it as that. And then inside of that, you could take another one. And if you chose to, you could draw this. Right? Let me give or take. So now you have two sort of situations you could look at here. This can help give you confluence to make a good decision. If A, then B, both happen, then C is where I'll buy. Something like that. All right? In this particular scenario, yeah, you broke out, but it was a false break. You gave it all back. This pattern, in my opinion, is destroyed. I don't like this pattern anymore. If you watch the video we did on patterns the other night, and we talked about the quality of patterns, 50 to 75% is where these patterns should break. Okay? You're getting very close to the apex over here. You violated the upper side and you violated the lower side within the same candle, within the same two candles. All right? 48 hours, you destroyed the top and the bottom. Destroyed them both. Okay? So it's not a super quality pattern. So I wouldn't make huge decisions off of that pattern. But now that I have a new pattern emerging, again with a false break, then I could look at this and say, okay, well, if I maintain this support down here, and you may have to move it around so you feel comfortable, but if I maintain this support down here, then I'm comfortable longing this, right, once I get over this line. Because pattern or no pattern, that don't change. That's resistance. You had confluence in a pattern, but get rid of the pattern. Who cares about the pattern? You have this. So you don't want a long resistance. That doesn't make any sense. No. Even though the pattern, this pattern is telling you, hey, dude, it's cool to long, man. Don't worry. You run out of money, I'll buy you dinner. It's cool. Except when you run out of money and you're hungry, he ain't going to buy you no dinner. You're going to have no dinner. So no sloppy joes for you. So what you do here is use this level as support, but don't jump into the trade until you have confirmation of your major support, which is flipping this to support. Then you could long up to this area here, which is obvious resistance, and you could protect yourself by sliding your stop up, and if it does break through, you ride the train. If it doesn't break through, you close the trade, you're out. You got your profit, get out. That sound good? Muaid, did I say it right? Oh, you're just laughing. Oh, there's a lot of new names here. All right, well, I got nothing on that name, but Banik, B-A-N-I-K. Oh, man, you guys are killing me. I got to get you guys some nicknames. All right, good for me in India, very good. Close enough. Okay, all right. I like the last one. Al-Mohammadi. What if I just call you Maddie? Can I call you Maddie? I feel like that's a lot easier. Way less like syllables. All right, Robbie, thanks for your wisdom, bro. This is the best. You're welcome. Awesome. Glad you like it. How to survive that big wick in the way up. Like this, how to survive that? So if you're playing this as a breakout long, right, you would need to have some profit targets that you're already looking at. And if one of them's the 200, then you're done, right? You would have hit your target right here. So to survive it, meaning you would have been in the trade. You would have played the breakout though. That's only breakout traders. Only breakout traders. And aggressive, there's two types, aggressive and conservative. The aggressive breakout trader places orders right above the breakout. So he would have lost this trade, but he would have more than made up for it on this trade. You understand? All right, let's see. Does VWAP always attract... Both ways. Both ways, Dem. Both ways. Okay? VWAP can act as a magnet for price to go up to or for VWAP to come to price. Okay? It works both ways. Looking for the separation in VWAP is an indication that you're going to get a fairly good move, meaning that the big time separation, price will usually go to VWAP. All right, outside of VWAP coming to price, but it does go both ways. It's like a double-headed magnet or whatever you want to call it. Theta pump and dump. Yeah, this chart is pretty alarming. You know, I mean, like some of these moves are just outrageous. Now, overall, you have some price action, so it is respecting something. But yeah, when this thing moves, it's like, oh my goodness gracious. It's kind of bizarre. All right, Link BTC 15-minute chart? What? Why? What are you talking about? You want to look at a 15-minute chart on Link BTC. Okay. What would you like to do? Are you scalping this? I mean, you got a parallel channel right here. So you got your low side, your high side. Ride the channel until it breaks. I mean, that's when you're talking 15-minute charts, you got to keep things pretty freaking simple. You start overcomplicating something like this thing will change in a heartbeat. Right? You won't know what happened. So this is what you got. Right? And that's essentially it. You play it until it's no longer valid. Like how this right here got very close to double topping. Right? Then you got some issues here. So you might want to line this up like this because now your angles are starting to change. So you're compressing price, right? It's getting smaller and smaller and smaller. So instead of becoming a channel, it becomes more of a like a rising wedge. On top of that, you got good confluence right here. 200 rejected it, fell back to the 100. The 100 did nothing for you, didn't save you at all. It ended up being the 50 that saved you, and even then, the 50 struggled. So putting any weight on a 50 or 100 at the present moment, I would not do, because they're not doing what they need to do. They're not acting well as support. They're also slanted downward, so they're not going to give you much, nor should they. Nor should they. All right. What kind of trader would you say you are? Swing, nothing below 4. I'm everything. Everything, Jay. Why did Signal Promise issue a trade at the top of the candle? For what? For what trade? Top of what candle? NKN, ICX, NAS, and DOC. What do we got here? There's nothing on Theta or Link. Yeah, you got DOC, NAS, ICX, and NKN. We haven't looked at any of those. All right, let's see. No, I can't call you Maddie. Come on. Yeah. I mean, the first chart for Theta not here. What? The first chart for Theta. I don't know what you mean. Oh, that's when BTC pumped at the alt stump. There's like a side conversation going on. I don't know what's happening. Let's see. Hi, hey, I'm new on this and trying to learn all this stuff. There is something I still don't understand is how traders play shorts. Bear scenario, if buying when going down means to me losing. You're not losing money if your plan is to short. So if you're shorting the market, you're taking a position that you are buying, here, right? And you are willing to sell, like whatever, down here, price-wise. And you have a contract that says you can ask this price, no matter where it is all the way down here. No matter where it is. And the further away it goes from where you bought it is all profits. Okay? I mean, it's a little beyond the scope of what we're talking about today. In fact, we got to get into that. Okay, so let's get into it. We talked a lot about other things. Okay, so we're going to talk about divergence. Sound good? For a day trader, 5-minute, 1 hour, what moving averages would be ideal to incorporate? Day traders aren't looking at 5-minute chart. You have to decide what you want to be. Scalpers are on 5-minute charts. Day trader, intraday traders are not looking at a 5-minute chart unless they're scalp. So we need to lock up which kind of trader we are. Good idea. And you're saying you're everything, no preference. Yeah, I mean, I'm like, so here's the thing with me, right? I've learned every style, every facet, right? So I didn't try to learn, I did, and I screwed up. I tried to learn all of them at the same time. Don't do it. It's a horrible idea. You'll waste like a year of your life. Just don't do that. Concentrate on one. Learn it. Know it. Master it. Then open the door to what the other time frames or other styles of trading can bring you. That is when you can have long-term positions open, mid-term positions open, day trade swing-term positions open, like, anywhere from like a 1 to 10-day trade to short-term intraday trades, all open at the same time, but all easily manageable. You try to do that on day one, you're wasting your life. I'm telling you right now, you're going to go back and have to unlearn everything that you incorrectly taught yourself. Don't do it. Concentrate on one, whatever fits your lifestyle. If this was me 5 years ago, the only thing I could trade was long positions because I worked 7 days a week, 18-something hours a day. When the hell am I going to trade? When am I going to look at charts? I sure as hell can't be a scalper. I can't do intraday. I can't monitor the markets. I'm too busy. So long-term positions worked for me. Once a week, I could spend 2-3 hours on a chart, take a look at them, see if any opportunities arose. If they did, I could lay in my entries. I could lay out my take profits once they hit, and I could lay out my stop loss. And that's it. And if that trade took 6 weeks to realize, then that's how long it took. You know, there's pros and cons in everything in life. I should, shouldn't have to explain that. so there's, maybe not one thing that's going to check all your boxes, but there might be something that's going to check most of them. All right, so if you figure that part out, that really eliminates a lot of the confusion, because you don't necessarily need to cloud your mind with a bunch of other stuff you're not going to use or is completely irrelevant to what you're trying to learn in the first place. Okay, moving on. Moving on. All right, we are going to talk about divergences, but we're only going to cover bullish divergence for today. And I'll try to keep these like quick, 10 minutes, whatever. This is not the end all be all, but it's just something you can, get a foundation on and, pick up a book and try to get the rest of the nuts and bolts, after the fact. Oh, let me get a sip of something because, it's warm. Okay. Let's talk about divergence. What is it? Divergence, very simply put, is just a disagreement between price and an indicator. That indicator, generally speaking, is going to be an oscillator of some type. RSI, MACD, OBV, MFI, any one of those. Now, within divergence, which is the disagreement, there's three types. You have regular divergence. There's something called hidden divergence. And then there's another thing called exaggerated divergence. You're not going to hear exaggerated often. And 9 times out of 10, when you hear divergence just called divergence, they're talking about regular. If you're talking about hidden divergence, it's very, very specific. It'll be within the wording of, hey, I see hidden bullish divergence 4-hour chart, BTC USD on Binance, okay? Within these three types, each one has a bullish version or variant and a bearish variant. Okay? On top of that, this is good for any chart, any time frame, in any market around the world. Because divergence is simply just a disagreement between price and an indicator, it's pretty easy to spot. On top of being easy to spot, it has absolutely nothing to do with the underlying asset. In other words, this is not an indicator that's only good for SPY or only good for Bitcoin or only good for Doge. It's good for everything. It's like a trend line on anything. Okay? Now, the source matters. I'm going to make that pretty clear. First off, let's pull up an RSI. Here's an RSI right here. Now, this is not a special RSI. There's nothing special about it. In fact, I'm going to get rid of it, and I'll put a new RSI just so we can all do this together. Okay? Bang. RSI. There it is. It's on the chart. Now, I'm just going to make it bigger by dragging it. Okay? If you want full screen, just double-click it. Easy. And let's do that. Okay, so when I say source matters, these plotted lines, or this one plotted line and all these different areas that it's at, are there for a reason. Okay, it's a 14-day average or 14-period average off of something. That something is located in your settings under source. And right now it's set to the close of the candle. The close of the candle. If I were to set this to the low of the candle, it's going to look different. This represents every low of the candle. If I were to set it to the high of the candle, oh, look at that. Things are different once again. And so on and so forth all the way across the board. Default is close. Length is 14 periods. So if you're on a 4-hour chart, it's 14 4-hour candles. Is basically what the math is behind that plot point right there. That's the reason that it's there. All right, we go into style. This is very simple. Okay, you have your actual RSI line. That is based off of the 14-day or 14 period length and how you set your source. This is off of the close. All right, now your upper band is considered the high point. So it's very interesting once RSI crosses the high point. You may have heard this referred to as overbought, meaning that there's so much buying and buying and buying and buying and buying. Well, you know what? Yeah, might have overbought it. In which case, it's an indication that you should be looking for confluence of trend reversal. Probably should start heading down. Doesn't like to be in those extremes for too long. But down to where? Well, down to the lower band. That is your 30. 30 is considered oversold, meaning that, yeah, you know, I knew we were overbought and we had to sell. Oh, dude, why did you sold just a hair too much? What do you think? What do you think? A little too much? Yeah, let's bring it back up. And background is just a background, so it's just easier to see. All right, so those are your very, 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 very basics on relative strength index, RSI. Now, let's go to another little thing I got prepared for you. Boom, look at that. Bullish divergence means you're always, always, always looking at the lows. I'm going to say that 400,000 more. No, I'm going to say it one more time and then just rewind it 400,000 times so it sinks in. Bullish divergence, you are always looking at the lows. And I'm going to explain that to you once we pull a chart up. Regular bullish divergence is going to look similar to this. Consider price is doing this. It's making lower lows. That's that right there. LL, lower lows. However, your indicator is creating divergence, and we said divergence is what? Is disagreement. So what's your indicator doing? It's making higher lows. Crazy. Absolutely mind blown. You with me? Hold on. There we go. I made it a little bigger for you. Okay. Very good. Moving on. Hidden bullish divergence is when price is making higher lows. And you're saying, well, what's the big deal here? We're just in trend. We are. However, your indicator is not following suit. It is making lower lows. In this situation, you are looking for continuation of trend. In other words, bullish, because it's bullish divergence. Hidden bullish divergence is when you have trend continuation. Where regular bearish divergence, you're looking for trend reversal. This is the hot dog right here. Everybody loves this one. Nobody really talks about this one. But this is the big one. That's the big one. Because this is the one where you feel like you got one in on the market. You know? 10 points for the new guy. Right? Because price was going down. And he bought. And he got the reversal. Because he spotted bullish divergence. The last one, you don't see all that often, but it is when price makes a double bottom. and the indicator is making higher lows. In this situation here, if you are already in a bull trend and you're already bullish, then you're looking for bullish continuation. If the preceding trend is down, it could be one or the other. Okay? It's unfortunately not perfect. Couple that with what you know about candles and candlestick patterns, and this would be a long, because it's a double bottom. Confluence with the RSI or oscillator or OBV or whatever you're using is telling you to go long. Okay? All of these situations are long. It's bullish divergence. It's just that regular is a reversal, hidden is continuation, and exaggerated is generally, continuation if the preceding trend is up, and more or less reversal if the trend is down. But anyway you look at it, you should be going up afterwards. Does that make sense? Okay, I know. This is all garbage unless you show me a chart. I agree. So somebody show me a chart. Anybody? Let's get some examples. PBHK says scalper. We'll get back to that right before we hop off. Okay. Anybody? Any chart, or else I'm going to have to go through the watch list, and you never know what we're going to find. Oh, geez. It could be anything. Oh, boy. All right. What do we got here? Key? That chart's terrible. He's talking with like a little bit of history here. There we go. Litecoin. All right. You guys are too slow. Loom. All right, Joe. You win. You won the package deal. Loom BTC. Holy macaroni. Yeah, I've been playing around. Don't mind me. Okay, so that was not good. All right. I need a different chart. Here we go. Okay. So Loom BTC, and we're looking for divergence. So what are we going to do? First off, let's get an RSI. And we'll come here. Bang. RSI. This is just built in. There's nothing special about this. It's just an RSI. I would suggest, you know what? I'll tell you what I'll do. I'm going to bring this over to here, make life a little bit easier. All right, so let's do this. Now we don't have to worry about nothing, okay? There we go, perfect. All right, Loom, BTC, Binance, hourly. Again, any time frame, any chart, any market, any way you want to do it. What you're looking for are peaks and valleys. Peaks and valleys, or troughs. You might hear them referred to as troughs. All right, when I'm looking for divergence, I like to have my indicator large, maybe a half-half. And because we are looking for bullish divergence at the moment, we are only looking at lows. And we're not looking at wicks, because the wick is not the close of the candle. This is set for close, so we are looking for closes. All right, so right off the bat, here is a low, here is a low. What you want to do is you want to find the counterpart and see if they agree or disagree. So what you can do is make life, slightly easy. You could mark with a vertical line, like so, and say, okay, I know I'm what? Stop it. I know on my chart that this represents a low, right, on RSI. And I know over here, well, here's another low, right? So bang, I got that marked. That's nice and easy. Now I don't have to really hunt around for it. It's kind of done. I take a trend line, very simple, and I just go like this. That's it. From low to low. And then I take another trend line, and I come up here to my low, And I say, hey, is this low higher or lower? Right. Well, of course, I got the magnet on, which is just nothing but a hassle. And then I'm looking at this low right here. So I'm right here. Okay? What do you got? Price is giving you a lower low. Your RSI is disagreeing with that. And it's giving you a higher low. The result? A reversal. Cool? That's one example. And then we look around. That's it. We can get rid of all of this, because we don't need any of it. And we say, okay, well, here's another low. Maybe we'll get lucky twice. Here's a low, and here's a low. So when I go to my low over here, I say, okay, well, here's my low, right here. And then here's my other low, right here. And I can say, well, that kind of looks like a double bottom. So right here you have exaggerated bullish divergence. It's exaggerated because you more or less have a double bottom. I know it's not the easiest to see. Okay? However, your RSI is disagreeing. Your RSI is saying, dude, I got support right here. I made a higher low. I'm ready to do this. In which case, you should be looking for an upside. Okay? Now, it's important to understand this is one tool in your toolbox. This is not the end-all be-all. This is not the only way to trade, and it's not the only thing to look at. You want to be able to develop a system that will allow you to use this in conjunction with other things that'll help you make trading decisions. Here's a low. Here's a low. So what happened over here? Well, our low over here is right here, and our low over here is right here. So what do you have? Nothing. You don't have anything. You got a lower low and a lower low. You're fine. What does that mean? Just continuation of trend. It means you have no divergence. In fact, what you have is confluence of continuation. Further downside. What you got down here. Okay? Now, see if we can't find an example of some hidden. So RSI should be making a lower low, lower low. We might have something close. We might have something close. So here's your low. Here's your low. Yeah, it's going to be real close. Is it going higher? So here's your close. And here's your close. Yeah, it is, just slightly. So this would be very slight hidden bullish divergence. Okay, very slight. I mean, it's slight, but it's there. It's there nonetheless. You didn't get much out of it, but you did get a little. So now, how do you trade these? How do you trade them? Well, when you spot the divergence, you're looking for the reaction, right? And then essentially you're buying that next candle, the confirmation. So right here in this situation, you're like, oh, dude, I don't know, man. I got some real slight hidden bullish divergence. This is where you want to understand what you're looking at. It helps. Candlestick patterns. Super Doji. Came down strong, lost momentum, went sideways. Strong, strong, sideways, sideways. This could be an idea for exhaustion. You got big wicks to the downside. Looks like there was a lot of buying in this zone. Okay. This might also be like an 886, something off of this down move over here. There could be a lot of different things shaking right here that would put you on the buy side. And then you buy it. Then you buy it. And you could look for a few things here to get you out as far as exits are concerned. You could still use the RSI and do that. Previous structures on the RSI. Could also do swings. This would essentially be your swing high before the low that made the divergence. And when price reacts to this level, right here, so right here, you could sell. All right? And if you hang on to it until it goes all the way up and crosses this line, well, then you would be selling up here. Basically, at the end of that candle, at the end of the day, sell it. Okay? So there's many different ways, but that's one. That's one way. Get the reaction, and then you go long. You got to get the reaction, though, because if this low was that low, and your divergence was all the way up here, right? You want to mark it. It should be the same candle. So when you mark it over here and you say, yo, dude, I got crazy divergence. This is awesome. And you go and you buy this, which is okay, right? This is a trade you'll get stopped out on. You're going to get stopped out on this trade because you're going to buy that. You're going to buy it. All right? Now, if you had coinciding variables or something that would tell you, like, this is not a good place to buy, well, then don't buy it. That's why you want to use something like this with candlestick patterns, moving averages, Fibonacci levels, horizontal support resistance, supply and demand zones. Whatever your cup of tea is, don't rely on just one thing. You want to be able to move around and get some different ideas and plot them all on the chart so that they make sense. All right, last one. Here's your candlestick close. Right here. Okay, now your other close would be here. And then you have this guy down here. And this guy over here. Okay. So now, price is almost a double bottom. Very slightly higher low. So you know right away, if you have a higher low, right, you know you're already looking at hidden bullish divergence, period, right? It's nothing else. Now, if it's a double bottom, if it's within your tolerance or your threshold of a double bottom, then you have the possibility you might have exaggerated. Then you take a look at your RSI and you say, all right, well, I got my low down here. Like, holy crap, I got this next higher low is like really up here. The slope is really sharp. So I say with that super sharp slope and this either being exaggerated or a very slight hidden, I would be okay with long in that. Mostly because of this slope. Right? You gotta remember, like, for RSI is relative strength. So this is giving strength. So if it's not as strong, making that low, that's essentially the same low as this low, well, then what does that tell you? This move is a lot weaker. It's a lot weaker. Which means the bulls are taking over. Which they did. Right here. Okay? So that essentially wraps it up. That's bullish divergence. We'll talk again about bearish divergence, but it is the opposite. But I want that to sink in because it can get confusing. And so if you only know the one and you're not, you don't have to think about the other, I think that'll help anybody learn it, period. Okay? All right, so let me scope chat, see if there's any questions, and then we'll wrap it up for the day. Let's see what we got here. Okay, so when BTC is moving fast, either up or down, is it best to stay off the market till things slow down? Or if BTC is down, is that a good buy time? Anytime BTC is hyper volatile is you want to be sidelines unless you're already in a good position that can outpace Bitcoin. Well, if you're a BTC trader, you're taking BTC trades that'll outperform Bitcoin. Otherwise, you would just be in Bitcoin. All right? So if Loom is looking like it's going to perform better than Bitcoin, then you want to be in Loom because Loom will get you more sats at the end of the trade. If you just stay in Bitcoin, then you just have the same amount of sats that you started with. There's no change. You're not trading at that point. All right? If the market is hyper volatile and you're a BTC trader, but you want to protect your USD value, which would make you not really a BTC trader, then you would go to fiat. Okay? But BTC traders don't care about USD value. I can't stress that enough. I'm sure I say it 1,000 times a day. BTC traders care about sats and how many sats they have. Should not be concerned about USD value. All right, Joe Lopez, Loom BTC, already did it. Zill, Doc, a lot of chart requests. Okay. What did you think about longing the 1 hour bullish div on RSI on BTC right now? No, because that's not something. I have larger plays that I would be considering. So I wouldn't be looking at a 1 hour chart when I have like much bigger, more important zones on a daily chart. That's just something I want to do. Very quick, check link BTC weekly chart. If there is more time. Link BTC weekly chart. I mean, you got the swing fail up top, one test for rejection, bit of a high. So far, you're sitting on the 382, so there's no change here. It's very much like the daily chart. 382 is holding until the 382 breaks. Then we can start talking about other levels downstairs, but 382 is holding for now, and it's been holding. All right, is RSI more accurate with 1 day or 4 hour charts? It's not a matter of whether the RSI is accurate. You could use any indicator that'll show disagreement with price, right? So RSI is just RSI. It doesn't matter if you use it on a 5-minute chart, on a 1 hour chart, on a daily chart, on a weekly chart. It doesn't matter. It's going to take 14 periods, if that's what you have it set for, and it's going to calculate those to give you an idea of relative strength, right? That's what you're looking for. It's a momentum oscillator. So it's looking for strength in the market. So think about that. The further out you go, right, the less relevant that data is actually going to be. So if you want to use RSI on like a monthly chart, that's great, but there's a whole lot of different things happening inside of that month that could change the scope of the overall monthly view, meaning that the stronger or more local you are to an extent, you should have a fairly accurate reading of strength in the market. Okay, let's see. Great stuff on the divergence. Did we do candlestick patterns in earlier streams? Would love to do that. We didn't. I can add it to the list, though. What a pleasure. Learned a lot. Thanks. You're welcome. No problem. Great information as always. Thank you. Learned good stuff today. Apply MITA. Very good. Very good. Robbie, okay. Great time frame that Europe was included. Yes, I'm trying to work you guys in. Sorry, it's just like we want to do the candle close, right? We want to do the daily candle close. obviously. And, we have no control over that. All right, so we did Loon BTC. Let me just take a look at ZIL real quick. I assume if you're not putting anything after it, you do mean BTC. Otherwise, put the actual, the chart there, whether it's BTC, USD. So let's see, ZIL real quick. Let's see what we got here. So it looks like it was ranging for a little while, but overall, we are coming down. You're making lower highs, you're making lower lows. You got a bit of a dip down here. So this is gonna look like a falling wedge. I don't think there's any real way out of that one. So if we did something, similar to this, and then we painted our low sides down here, yeah, that's gonna be our wedge. So like every other wedge, right, you're gonna have a ceiling and you're gonna have a floor. As you touch the floor, you're looking to long to the ceiling, and as you touch the ceiling, you're looking to short it to the floor. Whether this thing has anything else going on at the moment, you definitely have a level here for sure, and that's this support zone down here, which was resistance right here, which was support right here, which is currently resistance at the moment. So this, if you didn't buy here, right, then this would be an idea to allow this thing to long, break and close above, come up to the top, and then short it down. All right, this is mid trend. You don't want to do anything with this at the moment. All right. It's just not something you want to get into. It's not a good place to do anything. Now, if you break and close it and you don't care about this swing fail, then by all means you can long it. But I would allow this thing to sort of play out at the moment. All right, that's ZIL. Let's see, Doc. Doc, what's doing? All right, so Doc fell out of our parallel channel upward, started losing strength right here. You can see the strength loss as this high was nowhere near this high, right? You should have been up in this ballpark over here, not even close. Ended up shelving the top side, which is this right there. So that ends up becoming pretty bearish. Pull down to where, though? Where did you go? Not a great level, to be honest with you. It's not really a very good level. I would imagine you got further downside. It's not great support. What you did do was you lost your trend completely, because now you have that, which ends up giving you a swing fail to the downside, right? All of our swing fails we normally look at are to the upside. This is a swing fail to the downside. Now you're making a lower low. Right here, this could have saved you within the trend because you were making low, high, low, high, low, high, low. So right here, you just established a discrepancy within trend. So you're looking to reverse this trend. So, we could look at a few different things at the moment, right? But we got to consider a few things here. Now, if we're going to go with a broadening wedge, that would be a very good reason to get bullish on this. And that's going to be this move right here. So, you just have to allow yourself to look at it in different light. So this becomes very bullish. So, okay, what you have here is a megaphone. So now you got to get rid of this guy and get rid of that guy and get rid of that guy. All right. Well, we could have left that guy. There we go. All right. So in a megaphone pattern, it's exactly what the shape is, right? You have a very large, right, broadening wedge. In other words, it's getting wider and wider and wider. So you are allowed some tolerance to make a low. It's one of the very few exceptions where you're allowed to paint a lower low, but you're projected to make higher highs at the same time. All right, these don't happen really all the time. And for them for them to play out good, you can make excellent rewards. So you'd be looking at something like this. To scale it all down, you're looking at this move here, that move there, this move here, that move there, next move up top, right? And then you could be doing something like that down there. All right, now this one's a little exaggerated. It would have been a lot better had it been down here, but that's where the wick is. So, you know, you play the wick. It's all right. At the end of the day, Doc's got some hot moves here, but it does have to reclaim this zone here if it's going to get bullish on it. 236 would be a good spot. That's 138. I don't know that I would want to reevaluate it when we got to the 236. Now we could push well into this resistance zone at 195 up here, and that's if we play this whole thing out, which would be a fantastic move. But I want some reevaluation at the 2-3. One, I want to see a reaction because it is the 2-3. And two, I would probably check MAs and volume and try to get an idea on what's going on here. Like, is the move strong? The buying right now is going down as far as volume is concerned. We went up a little and then went sideways. No major MA influence at the present moment. We have a 50 just above us, sitting around 125. We got a 20 around 136. And then you got support all the way down here at 96 from the 100. So it's an interesting move. It's an interesting play. You can definitely reap some good rewards here. So you just have to allow the megaphone to sort of play out and see if it does. I push up that 2-3 though. I'd feel okay about a 2-3-6. This is all right. All right, and what was the last one before we call it a day? ETHUSD, of course. ETHUSD. Wrong chart. Okay, ETHUSD, yes, just that same level, man. No change. Nothing but rejection. So the break yesterday, false break, obviously we gave it all back so far today. You are holding the support level here, but you know, it's one of those situations where there's not, until you get out of this junk, right, it's only scalp plays. There's no direction at all. This is pure chop. Pure chop. You're being clamped right now by the 50 and the 100. 50 purple, 100 blue. So, you know, I want to see an actual move here. And by that, I mean, we got to get over this line that has been holding us back. That's our big SR flip, right? And I want to get over this area of just, you know, nastiness. I want to get over that. If we can get over here, break and close above, get back into our pitchfork, you know, then we got something to look at. But until then, this has just been just a disgusting little bit of action over here. Very gross. Very gross. Okay. Very good. Let's make sure Bitcoin didn't do anything like super wild while we've been on stream. Nah, same. 200's holding up for now. That's it. That's the move. So the 200 is providing support. We'll see. Volume has been trickling down over the last 4 days. We're more or less sideways and down. So it could be slight exhaustion. Not too much to go on right now. I still want to see a push down to the swing fail. Maybe we might not get it today. Maybe tomorrow. Or we could get it closer to daily candle close when we got some more volatility. So we'll see. But so far right now, you can't deny that the 200's holding it up. So the 200 is doing its job at the moment. All right. Very good. Well, thank you for joining me. I hope you guys, you know, got something out of it. I hope you learned something in the process. You know, and we'll take it from there. All right. I want to see you guys on the exchanges. And until then, happy trading.